Hi, I'm Ed Berliner, and I'd like to welcome you to the Straight Line Profits Summit. If you're like most folks, Wall Street no longer makes sense to you. You watch day in and day out as companies that appear healthy, companies outperforming their revenue, profit, and growth projections, their stocks crash for no logical reason. All the while, shoddy companies that should be on the verge of bankruptcy, their stocks soar to unprecedented heights. You fear that reality, conventional wisdom, the rules we always thought applied to Wall Street, no longer apply. And you are right to think that way. There is a new reality. And if you don't adapt to it, you will be left behind in the dust. If you're looking for a way to cut through this chaos, a new way to grow your wealth aggressively and quickly, get ready. Because you're about to witness something truly astonishing. An investment breakthrough, decades in the making, that originated at none other than NASA's Jet Propulsion Lab. Its inventor, one of the world's leading quantitative analysts, has discovered a way to reverse engineer NASA technology, the very same technology that was critical to the Mariner missions to Venus and Mars. When applied to space travel, this innovation helps propel small vessels hundreds of millions of miles across our solar system, guiding them safely and precisely to destinations no man has set foot on before. And when it's applied to certain stocks, the result is something you might find even more amazing. Here, I'll show you. Here's a chart of Lockheed Martin, the massive $76 billion defense contractor. It's classic blue chip stock, and it's trapped in a cycle of chaos. Extreme spikes, then extreme crashes over and over again. To the outside investor, this company was flashing bright warning signs, but looks can be deceiving. When this stunning invention sets its sights on stocks like Lockheed Martin, it will in real time run a nearly unfathomable amount of calculations and permutations. Next, it will hunt for an imbalance between what Wall Street is telling you this stock is priced at and its true price. The result? The chaos affecting Lockheed Martin has been eliminated, and the chart that once looked like this has transformed into this. Your eyes aren't fooling you. It's the same company, Lockheed Martin, only now this stock is shooting up in a near straight line. But that's just the beginning. Armed with this revolutionary innovation, you could now collect countless windfalls from Lockheed Martin. Imagine getting paid $8,218 in 7 days. Another $8,521 in 10 days. Here, you could have made $11,033 in 17 days. Even $12,262 in only 4 days. Altogether, Lockheed Martin could have made you $182,615 richer. And it began with a single $2,500 investment. Even better, you can have these types of payouts automatically deposited in your account without you having to lift a finger. During this historic event, and for the first time ever, this invention is going to be revealed to you. You are going to watch other stocks that are trapped in a cycle of chaos, like Energy Transfer Partners, change into this. More importantly, you're going to discover how you could potentially and repeatedly transform a $2,500 stake into $97,222 in 18 days, $10,583 in 5 days, $28,750 in 11 days. Altogether, a total windfall of $172,815 could be yours, all from one stock like Energy Transfer Partners. Again, you'll be shown how to pre-program these types of trades, so any payouts are automatically deposited in your account. Now, get ready to be amazed, because joining me is the man behind this groundbreaking invention, Keith Fitzgerald. Keith, thanks so much for being here.
It is my pleasure, Ed. Thanks for having me.
What you have created is truly remarkable. This took decades to develop and at a cost of over $5 million.
And it's worth every second and every penny.
Clearly, without doubt. Now, you're going to pull back the curtain revealing everything today. In fact, you're going to share two opportunities with our viewers ahead. They can set both of them up right after this event, and each has the potential to pay out 6 figures. So everybody is going to want to pay attention for that big surprise. Here we go. Let's jump right in. Keith, your invention. Pretty safe to say this solves a very big problem a lot of people are facing, even if they don't know it.
Ed, you nailed it. Most investors look at stocks today, they think there's no rhyme or reason.
And each
That's because oftentimes there is no rhyme or reason to how the stock market behaves. You're not crazy if this is what you're thinking. That's what's actually happening. Now, in the old days, all we had to worry about were the fundamentals of a company. Its revenue, its profit margins. We'd take into account how the economy was behaving, things like that. But now we live in an age of supercomputers that perform millions of algorithmic trades, all the high-frequency trading you hear so much about today. Modern technology is able to, at a whim, temporarily manipulate the stock market. And this happens every single day around the clock. This creates imbalances between where the stock market has priced certain stocks and their true price. For instance, you could be looking at a stock that Wall Street has priced at $10 a share, but its true price is $50 a share. And you would never know it. That's how out of whack things are. And that's why you are seeing chaos in these charts.
And what you've developed helps eliminate this chaos.
Right. It is an extremely powerful way to detect previously undetectable price imbalances in stocks. And in doing so, it can pinpoint the true price of a stock. And I'm taking advantage of this. The outcome, this straightening of the line on the stock chart, it's stunning to see.
It's like you're seeing an invisible momentum surge that nobody else can see.
Exactly. That's what it is. And that's what propels that stock to its true price. Even more stunning, though, Ed, is you can use this exact same phenomenon to capture multiple rapid-fire windfalls, one after another, all from the same stock, all from executing, in fact, a very simple trade that anybody can do. These trades can even easily be set up to automatically and repeatedly deposit your winnings into your account.
Keith, I'm still trying to get my head, I'm sure we all are, just wrapped around this invention here. So tell the folks watching what you call this.
This is a mouthful. I call it the Arbitrage Detection Grid System. Now, that's a big name, I know. I usually go by its nickname, the ADG system.
Now, you told me backstage your ADG system identifies stocks that could pay out six-figure windfalls. And you believe anybody, even somebody who's completely new to investing, they've never bought a stock before in their entire life, your invention could show them how to make at least $250,000 over the next year, correct?
In fact, I'm 100% sure of it, Ed, because I've been analyzing this stuff over a long period of time. Go back a bit, for example. Look at Lam Research. They're in the semiconductor business, and at $22 billion, they're a big player in it. But their chart, Ed, is pure chaos. You've got a crash, a recovery, a crash, a recovery. Wall Street, Ed, has priced Lam Research at $96.17 a share. But Wall Street has no idea what this stock's true price is. My ADG system, Ed, is designed to determine that true price. And it's more than $205 a share. And Ed, that's a 113% price imbalance. My ADG system then pinpoints when the market can correct this imbalance. And suddenly, you've got a stock whose chart was almost entirely chaotic and almost totally unpredictable has transformed into this.
That is absolutely incredible. That line looks a whole lot straighter now.
Exactly. And what's more, every single person watching this, Ed, knowing this stock's true price and how fast it can hit that mark, they can repeatedly execute a very simple trade. And Ed, they could potentially collect a chain of windfalls from it. Altogether, $131,684. And bear in mind, that's with only $2,500 on the line at any given time. And Ed, that's just from one stock, Lam Research. Let's take a look at Snap-on Inc. Similar story. Before, you have absolute chaos. Afterwards, not so much chaos. A nearly straight line. The paydays from this stock could have added up to whopping $184,267. Look at the Chemours Company, Ed. They're a chemical manufacturer. Before, you have chaos. You've got a big crash and a big recovery. But afterwards, look at this, a much straighter line, heading in a much better direction, up. Your total reward, Ed, could have been $101,958. So if someone can make $131,684 or $184,267 or even $101,958 from a single stock, do I believe they can make over $250,000 over the course of an entire year? Absolutely, positively, yes. And keep in mind, Ed, I'm being incredibly conservative with that projection. Here's the thing. In any given year, Ed, there are at least 100 opportunities just like the Chemours Company, just like Snap-on, and just like Lam Research that could pay out six-figure windfalls.
And your ADG system is designed to quickly pinpoint them all, yes?
Every single one of them. That's how big this is.
Now, I mentioned earlier, but it's definitely worth saying again. In a little bit, you're going to share two opportunities your ADG system has uncovered. Our viewers can set both of them up right after this event. You're going to reveal the names of these companies, how to execute the trade step by step, how to make sure any winnings are automatically deposited in their accounts, absolutely everything. And based on what I've already seen, maybe these two opportunities alone can make you, our viewers, $250,000 richer.
Ed, that is not out of the question. My team and I ran every test you can imagine using decades of data. I'm talking binary inversion testing. We ran back-tested simulations focusing on stocks in the S&P 500, the NASDAQ, small cap, mid-size, large cap stocks. We did it all. And we stress tested this system, Ed. We put it through the ringer. I even went so far as to have my ADG system validated by an independent data analytics firm that works with major institutional investors. So, this is really important, we have 100% independent validation of its effectiveness. And finally, we even went so far as to beta test version after version with a small group of investors of all shapes and sizes, Ed. The goal was never to eliminate all risk from investing. Nobody's ever done that, and nobody ever will. But from our beta test, the money folks were making provided the best proof that we had created something that was truly transformative.
And we're going to share some of the letters we received from that group later on, because we've got a lot of people out there who are retired or want to retire someday, but don't have enough saved up. They're looking for a way to quickly build up their wealth, but they don't know how to invest in a stock market that no longer makes any sense to them at all.
Absolutely, and this can solve all of those problems, Ed. By identifying a stock's true price at a specific moment in time, we are dramatically lowering the risk. And what's more, to grab this chain of windfalls, the trade I target involved no intraday trading, no put selling, no covered calls, no straddles, or anything even remotely complicated. Everything, Ed, and that's the beauty of this, everything is very, very simple. What's more, you don't have to bet the farm on this to do it. You can pocket a six-figure windfall from a single stock by dedicating just $2,500 to these trades. You can start with $500 or you can start with $100 a trade if you do this. Anybody, Ed, can do this.
Well, now, I'm sure our viewers are eager to see how your ADG system works. I certainly know that I am. But first, Keith, for the last 35 years, you have been one of the country's, actually, one of the world's most successful quantitative analysts. You have helped generate billions of dollars in new wealth for high net worth investors on Wall Street and for those who follow you here at Money Morning. You're a regular guest on Fox Business, CNBC, Bloomberg, The Wall Street Journal, MarketWatch, Wired, and you name it. Forbes even called you a business visionary. So come on, here we go. Little chance. Give me some of that backstory here. What made you think it was even possible to apply NASA technology to the stock market?
Two words, Ed. Dennis Tito. Dennis is the founder of a company called Wilshire Associates. Most people have never heard of it, but that's where I got my start, where I really came up through the ranks. Wilshire Associates is one of Wall Street's heaviest heavy hitters.
You know, wait a minute. I'll say that's exactly true. Wilshire Associates manages $8 trillion for 500 of the biggest institutional firms in the world.
Because of Dennis Tito. Now, Ed, they call people like myself and Dennis the rocket scientists of Wall Street. But back in the 60s, here's the thing, Dennis was literally a rocket scientist. He was an aerospace engineer at NASA's Jet Propulsion Lab. Here today is JPL. He designed the flight paths to Mars and Venus for two of the Mariner spacecraft missions. Now, one day, Dennis must have had some sort of epiphany where he asked himself, and I don't want to put words in Dennis's mouth, but he must have asked himself, hey, what would happen if I applied my work at NASA to the stock market? And like many brilliant ideas, Ed, it sounded crazy at first.
Yeah, just a little bit, I have to agree.
Yeah, but you know what? That crazy idea revolutionized Wall Street. And I'm not trying to insult my colleagues at the big firms here, but let's get serious. The distance a spacecraft has to travel to get to Mars, Ed, you're talking about 34 million to 249 million miles. For Venus, it's 24 million to 162 million miles. You make even the tiniest miscalculation, a rounding error, and you are potentially adding millions of miles to a mission. Dennis was able to determine the exact moment that spacecraft had to take off to reach its destination, and what's more, in the fastest amount of time possible. Not to mention the precise path the spacecraft should travel to safely avoid space debris, asteroids, solar flares, a nearly infinitesimal amount of things, outside threats really, that could doom a mission.
You're saying once you've conquered that, as Dennis did, predicting the future of the stock market is going to be
actually child's play, which it was for him. This guy, Dennis, is so brilliant. Get this. I mean, everybody's talking about sending astronauts to Mars now, but back in 2013, Dennis stood in front of Congress and he testified that he had discovered a tiny window of time where everything, Ed, everything lines up perfectly, and what's more, a near straight line path to Mars appears. This happens very briefly once every 15 years or so, and he found it. That's already mind-blowing stuff, right? But wait till you hear this, Ed. Then Dennis reveals he's figured out a way to make a spacecraft use the gravitational forces of Earth, Mars, and the Sun as propulsion. And he's done it in such a way that it would shave 88 days off that trip to Mars. So I'd venture a guess, yeah, conquering Wall Street was child's play. So anyway, Dennis gets there, long story short, immediately, and he starts applying his work at NASA to the stock market. I joined Wilshire Associates not too long after, and let me tell you something, Ed, it was heady stuff. It was so exciting to be in the middle of all this. Dennis was a master at spotting arbitrage opportunities.
Okay, stop right there. Explain arbitrage for those who aren't familiar with the term.
I'd be happy to. Arbitrage is a phenomenon where you have one investment being sold for two different prices at two different places at the same time, and you make money by exploiting this price imbalance. Look at it this way. I know you're a huge sports fan. You've been to professional baseball and football games, right?
More times than I can count.
I kind of thought so. But outside the stadium, right, you always find street vendors selling bags of peanuts, hats, whatever. So let's say you and I were both vendors. We're both outside the same stadium, but we're located on opposite ends of the stadium, right? So we're selling bottles of water just like this one.
Same brand, same size.
Exactly. Same everything, except I'm able to sell this bottle of water, Ed, for $2 on my side, and you're only fetching $1.50 for it on yours. So in theory, I could buy this bottle of water from you for $1.50, run around the stadium, time it basically takes me to walk back to my side, and sell it for $2.
And you make your 50 cents profit.
Yeah, and then I do this over and over again.
You're going to get pretty tired of all that walking back and forth, don't you?
Yeah, probably. And I'm going to wear a hole in the bottom of my shoes too. But, all joking aside, that's arbitrage. You think you know the price of something at that moment in time, but I know its true price. Eventually, the market catches on to this, but then again, the market always catches on, and that's exactly what Dennis wanted to happen. Because, Ed, when the market detects a price imbalance, market forces immediately kick in to fix it, and that is what propels an asset towards its true price. Now, one of Dennis's favorite tricks was to exploit arbitrage on the Dow Jones Index. Not one stock, the entire index. He discovered a price imbalance that would appear in the morning and correct itself by 4 p.m. that day. Dennis would make his investment in the morning, then close it out in the afternoon and collect his winnings. And he would repeat this over and over again. Long story short, arbitrage made Dennis one of the richest men in the world.
Interestingly enough, to bring your story full circle, he wasn't an astronaut at NASA, so he never traveled to outer space while he worked there. But in 2001, Dennis Tito paid $20 million to fund his own trip to the International Space Station, and he was the first to ever do this.
Ed, if somebody tried to write Dennis's life story, nobody would believe it. But it's all true.
Everything you just said, though, begs the question. What does it have to do with your invention, your ADG system?
That's a great question, and I am glad you asked. Dennis made all his money playing small ball because at Wilshire, our clients were mostly pension funds. Now, pension funds have billions and billions of dollars to invest at any given time. They can't be pouring all this money into individual stocks. Mutual funds, indexes, those things are more up their alley. They were looking for small, predictable returns. 1 or 2% at times. Now, that doesn't sound like much, but here's the thing. If you take a large amount of money and you grow it consistently by a small percentage, that equals a ton of money.
You grow $10 billion by 2% a month. That's an extra $200 million a month.
It is. Indexes like the Dow Jones do not shoot up hundreds of percentage points in months. Stocks can, though. Now, I've always believed that you could take much of Dennis's brilliant work and enhance it with modern technology to identify the very arbitrage opportunities we're talking about in specific stocks. In doing so, that would create the potential for infinitely higher windfalls. And there's a very basic trade I harness to do this. Not enough folks know about this, but it is the thing that makes it possible to capture repeated windfalls from the same stock. Each windfall could pay out in days or weeks. And this cash, Ed, this cash can be automatically deposited in your account. Case in point, Cognex Corporation. They build sensors used to automate manufacturing, and they're a $7 billion company. Back in early 2016, Cognex Corporation was trapped in a cycle of chaos. There were wild ups and downs, peaks and valleys. And Wall Street was telling the world this stock was $16.72 a share because Wall Street had no idea what Cognex's true price was. But my ADG system would have known, Ed. It would have told you that Cognex's true price was somewhere north of, get this, $65 a share. So the arbitrage opportunity is between those two numbers. And that's where you can make a massive amount of money. And not surprisingly, look what happened.
You straightened the line. This stock took off just like your ADG system predicted that it would.
Yes, that's because arbitrage, by its very nature, is a short-term phenomenon. Eventually, the market will correct itself, Ed. And since my ADG system can predict this outcome, I'm actually able to capitalize on it. Cognex reached a bit higher than the $65 a share I thought it would, landing, in fact, at $70.26 a share.
Wow, Keith, that is really close.
That, Ed, is what my ADG system is designed to do. With Cognex, a traditional buy and hold investor could have made 320%, and that is not bad. But as you know, I don't like to do things the traditional way. Real wealth is created from breaking tradition, and you can amplify the profits you capture from this arbitrage. And what's more, you can repeatedly execute a very simple yet non-traditional trade. Bear in mind, you're only putting $2,500 on the line at any given time. What's more, you could potentially collect a succession of quick hit windfalls. $5,227, $9,218, $13,131, and $9,330. You could have become $96,520 richer.
Okay, Keith, now take us under the hood of your ADG system.
I'd be happy to.
So how are you able to identify these arbitrage opportunities in the first place?
Well, here's the thing, Ed. To this day, most analysts, traders, Wall Street's big shots, they look at stocks in two dimensions. Two dimensions are price and time. Now, don't get me wrong, price and time are both very, very important, critical, in fact. But what price and time tell you is about the past. They don't give you an accurate understanding of the present. What's more, they certainly do not help you predict the future. This is an instance, forgive me, where I'm going to have to explain something that is inherently complex, and I'll try to do it in the simplest manner possible. Ed, the stock charts that we're all used to, you have an x-axis that runs horizontally, and you have a y-axis that runs vertically, right?
Of course.
Okay, what do we usually see on the x-axis?
The date. So here you're talking about time.
Exactly. And the y-axis?
The share price.
Perfect. Now, here's what I want you to do. Picture a 3D grid, Ed. You have an X and a Y axis, but now you're adding a Z axis. And this is really important because each axis represents a different measure of time.
Okay, hang on just a sec here. Is it okay if everybody in the audience, all of our viewers in my head, is just completely spinning right now?
Yes, it is, but stay with me, all right? It's really important that you understand the basics. That's all you need. We'll start with the x-axis. The x-axis measures a stock's past. Now, keep in mind, Ed, I'm not focusing on a current share price. Instead, my ADG system is scoring a stock based on its compound annual growth rate over a period of, say, 5 or 10 years. In other words, even with all of this chaos, the ups and downs, what I want to know is how much has this stock been growing year to year overall, right?
Right, exactly.
Okay, so it's logical when we're doing this calculation that we want a bigger number here, right?
Obviously.
Good. Common sense tells you that a stock growing at 20% a year over a long period of time is better than one growing at 10%. Next, you have the y-axis. Only now we're focusing on a stock at this moment in time. So we're shifting from the past to present day. But instead of plotting out the current share price, my ADG system is calculating what I call the trajectory score. And no surprise, this is where it really gets complicated. What you're doing is you're measuring whether a stock's path over, say, the last 50 days has begun to straighten out. And I'll say that again. It's begun to straighten out. And what you're looking for, not surprisingly, is the wild ups and downs are happening less frequently, which, not surprisingly, also means that the stock, and here's the magic part, is rising more quickly than it was before.
Oh, yeah, it is. Keith, yeah, just as simple as that.
I know. But look, Ed, you know it as well as I do. If it were simple, everybody would be doing this, right? Sure. So think about the trajectory score like this. When my wife and I are in the car, like most married couples, sometimes we'll disagree about the fastest way to get from point A to point B. I'm sure you've had that happen, right?
Indeed.
Okay, so if we're going to our favorite restaurant, I have a way that I like to get there, and my bride has a different way. My way is often straighter, but it has more stoplights. Her way requires a lot more back roads and turns, but hardly any lights. I believe my way is faster. Not surprisingly, she has the same opinion about hers.
Which, of course, we then have to ask ourselves the question, who's right?
Well, all joking aside, that depends on many, many factors, right? It depends on the time of day, it depends on the weather, it depends on traffic lights, and, am I getting all greens and reds? So we have recent history here as the judge. Maybe we go to this place, for example. We got a favorite little shop we go to in a restaurant near us every day for breakfast. So the last 50 trips, when all was said and done, my straighter path was faster 90% of the time. My wife's way, on the other hand, was faster the other 10%.
Now, with those odds, of course, I would take her path every single day because I'd win 9 out of 10 times.
And she may have a different opinion, Ed, but you'd be right to do that too. The trajectory score operates in a similar fashion. It's asking some important questions and is creating a score from the answers. And what we're looking for, the important bit of information, is how straight is that stock's current path? And secondarily, could that lead to fast profits and with the least amount of risk? Now, I got to make a point here. Notice I didn't say risk-free. Risk-free is a fairy tale. But here's the thing. Stocks hiding arbitrage opportunities tend to have high trajectory scores. And finally, we have our third axis, the z-axis. This is where most of our proprietary work is located. This is where we predict a stock's future by determining its true price. And in doing so, we're weighing ratios like how overbought to how oversold it is. We're comparing it to other stocks in the sector. And subsequently, we're also comparing it to other stocks of its size, small caps, mid caps, large caps, and so on. The thing is, a stock that Wall Street tells you is worth $70 a share, but its true price is $75 a share, will have a lower score than a stock that Wall Street tells you is worth $10, but its true price is 3 times higher than that, or $30 a share.
Okay, I want to make sure that I'm following you here. Your CAGR and trajectory scores, they analyze a stock's past and present to detect a price imbalance at that specific moment in time. Then your true price score calculates how big that imbalance is, and when market forces should kick in, fix it. That's what creates these enormous 6-figure arbitrage opportunities from some very special stocks. Have I got it?
Yes, you do. But here's the thing you got to ask yourself. Which stocks are special? On any given day, you got 4,000, give or take, trading on the major exchanges at any time. You got to ask yourself, which could be hiding the biggest arbitrage opportunities? And we can answer that. Every morning before the opening bell rings, my ADG system places all of these major stocks on the grid, and it starts crunching those numbers, looking for those 3 specific scores for each one of them. I got to tell you, even for a numbers geek like me, it is really a sight to see. All of these peaks are forming different heights and widths. They're all displaying different colors. About twice a week, you'll see a stock separate itself from the pack. It'll have the tallest peak, it'll be flashing bright red, and it'll move to the upper right-hand corner of the grid, Ed, just like you're seeing right now. And this is the important part. That means, despite the chaos that everybody else sees, what that movement tells you, that stock that's moving up by itself, it tells you that stock's been aggressively growing in value year over year. It tells you that it's currently on an upward trajectory. And this is the really cool part. It also tells you that Wall Street's price for this stock is dramatically lower than its true price. past, present, future, all of which is together creating this powder keg that's about to explode.
All right, we've talked about it. Now let's go ahead and put it to work.
Let's do it. Here's a chart of Dollar Tree that starts all the way back in the summer of 2008. And if you recall, that was a chaotic time for all stocks. When the moment was right, my ADG system would have zeroed in on it because it was red hot. And that's when the market had determined incorrectly that Dollar Tree was a $16.92 a share stock. But my ADG system, Ed, would have predicted its true price, and that should have been above $49 a share. That is a 189% price imbalance.
And if I read that correctly, also a 189% windfall opportunity just waiting for somebody to capture.
Bingo. When the market forces kicked in, the stock actually shot up to 55.17. So I was off and conservative. 226% higher. Even better than the projection. But you could have done even better than that, Ed. You could have transformed a series of $2,500 investments in Dollar Tree into a total payday of, get this, $182,218, which is, I submit, a much, much better outcome.
And I will give you a third much on that. You're right on.
Fair enough. Here's the other interesting thing. In the average time to collect each of those windfalls, Ed, it was 15 days.
Well, it's like collecting a check about every 2 weeks, which is completely amazing and what people don't think is possible. I think what you've created here is a completely new and extremely powerful alternative income stream, yes?
Well, I think so. I agree. And in fact, this is something new. It is an alternative way of making money, and I don't think it gets any better than this. In any given year, my ADG system can hunt for and uncover over 100 stocks. That's 100 arbitrage opportunities. Now, you don't win every time. You will be on the wrong side of these trades every once in a while. Big picture though, like I said earlier, a conservative goal for any investor, beginner or expert alike, should be to use this intelligence to make $250,000 a year. And I'm stressing that's a conservative goal because each of these opportunities has the potential to make you six figures. Remember, it was $182,615 for Lockheed Martin, $172,815 for Energy Transfer Partners, and $131,684 for Lam Research. How about TransDigm Group, Ed? You up for another one?
Let's go.
Okay, it's another perfect example. They're not a household name, but they are an $18 billion aerospace firm, a huge defense contractor. Back in late 2009 and 2010, Wall Street's bull run was raging, yet this stock was all over the map, all over the place. It was absolute chaos, and that didn't matter. In January 2010, my ADG system could have spotted an enormous arbitrage opportunity with this company. It stood out from the crowd. Look at the grid. This stock was sporting a humongous peak in glowing bright red.
Now look where it's at, too, in the top right corner of the grid. If someone hadn't heard of TransDigm before, they wouldn't have forgotten it after seeing this kind of action.
No, they wouldn't. And look what happened. Simply buying and holding shares of the stock could have resulted in you collecting a nice 219% gain. Or you could have approached this arbitrage opportunity my way. Now you can pocket payday after payday. Each is coming your way in just under 15 days on average. By the time TransDigm reached its true share price, you could have found yourself $229,350 richer. Not bad, huh?
Not bad at all.
Here's another one. My ADG system could have also handed you metadata solutions on a silver platter. Buy and hold the stock, you could have made 330%. Or you could have taken things to that next level. With a series of simple trades, you could have found yourself $234,717 richer. What's more, the paydays would have arrived every 13 days on average.
All right, Keith, it's time to discuss the missing piece, what you really haven't revealed yet. This simple trade that makes all of this possible. Go ahead and explain it.
I will get right to the point. I am targeting the most basic form of options trade.
Keith, trading options is one of these things most investors, especially the less experienced investors, now they've heard of it, but let's be honest, they're really not quite sure how it works.
Well, you know, there's definitely a lot of mystery surrounding something that really isn't that mysterious. You know, listen, when you buy a stock, John Deere, Apple, Berkshire Hathaway, you buy those shares. You're making a bet. And to lock up a halfway decent block of shares, it might set you back $10,000, $20,000, maybe $50,000 or more. That's what I call a buy and hold bet. Options are really like side bets. They're short-term side bets where you are not buying shares of the stock. Instead, what you're doing is betting on how much the price of those shares will rise or fall in the very near future. Imagine this. You and your buddy are both looking at the same stock. In this case, it's Gilead Sciences. It's an $87 billion pharmaceutical giant. And this stock was acting like so many others.
What we've talked about, trapped in a cycle of chaos.
Exactly. Extreme ups and downs, peaks and valleys. And your buddy goes, "Hey, Ed, Gilead Sciences is an absolute dog, and I will bet you a month from now it's in the gutter." And you're thinking, this guy's freaking nuts. The stock is only going to go in one direction, up. So naturally, Ed, you tell your buddy, "Hey, if you want to make your bet, I'll take your money." And the stage at that point is set for a perfect bet between you two. At the time, shares of Gilead Sciences were priced at $28.32 a pop, and that's what buy and hold investors were paying. But you and your buddy are not interested in that bet. You want the side bet, because each option on Gilead Sciences is priced at $2.70 a share. So you say to your buddy, "Hey, let's bet the $2.70, and if the stock is down in a month, you keep the $2.70, it's yours. But, if that stock goes up, you have to pay me dollar for dollar the price it's risen." Your buddy agrees to those terms, and you guys are off to the races. Voila, you've entered into what's called an options contract. And in doing so, three amazing things, Ed, just happened for you, not your buddy. I like this part. Number one, you put a cap on your downside risk. And what I mean by that is the maximum you can lose is $2.70 per lot. Number two, your upside is uncapped, meaning unlimited. In fact, Ed, your buddy, and I love this part, may have to pay you a ridiculous amount of money if shares of Gilead soar over the next month. And number three, you just locked in all of the benefits of a $28.32 per share stock for only $2.70. And this last point, I want to make crystal clear. If you were a buy and hold investor, Ed, a lot of people are, and you paid $28.32 for a share of Gilead, every $1 that stock rises, you make a buck. You make an extra 3.5% on your money. That's boring. Your side bet, on the other hand, not so boring. You're betting $2.70 and you still make $1 for every dollar the stock rises. That, Ed, is the real magic, because that difference, that important figure right here, equals an extra 37% return on your money per dollar.
This, if I get this right, is the very definition of a lopsided bet.
Exactly. So my thinking is, why not try to sweeten the pot even more? Well, there's no need. That pot was already sweetened, Ed, because when you enter into an options contract, this side bet isn't just one on one share of Gilead Sciences, it's on 100 shares. So, Ed, if you were a buy and hold investor and you decided to buy 100 shares of Gilead Sciences straight up, how much are you going to pay out of your pocket?
100 shares times $28.32, that's $2,832.
That it would. Now, what is that options contract costing you?
$2.70 a share times 100, $270, right?
Here's the thing. You still have a secret weapon. It's one your buddy doesn't know about. It's my ADG system. Before you ever agreed to this side bet, it could have already identified an arbitrage opportunity with Gilead Sciences. It could have determined that Gilead's true price was not $28.32 a share. It was at least $100 a share. That's a 253% arbitrage opportunity. And when I think about it, when you have this kind of secret weapon, it's like betting on whether the sun is going to rise tomorrow.
All right, Keith, obviously, this is a hypothetical story. In the real world, you don't have to make these side bets with your buddy, right?
Nor should you. I mean, why are you going to risk a friendship when there are literally millions of investors out there who are willing to make these side bets where the odds can be ridiculously stacked in your favor? The way Wall Street works, if you don't take their money, somebody else will. So, Ed, take their money.
And it could be a lot of money.
Exactly. And now that you are not betting against your buddy, maybe you want to make a $2,500 side bet on Gilead Sciences. You would have won your first bet and pocketed $11,990. I mean, not bad, huh?
Not bad at all, but I have a feeling there's more.
Exactly. Why stop there? Keep making the same bet. In month 2, you could have pocketed an extra $4,888, and then $16,018, $12,224. Your total payout, Ed, would have been $187,814 from repeatedly executing those side bets we just talked about. So here's the thing, Ed, simple question. Would you rather invest $2,500 in shares of Gilead Sciences to make $9,156, which is essentially a buy and hold bet, when you could take basically the same amount of money for each side bet and transform that into $187,814? Your payout is now 20x bigger.
I cannot think of a reason why I wouldn't want to do it your way. Seriously, I mean, Keith, you mentioned how each of those side bets could automatically pay you when the time is right, correct?
Yeah. And while we're on the subject, thanks for bringing that up. I almost forgot. I'd set up what's called a trailing stop. It's just another couple clicks in my account, and my ADG system is designed to tell me what to select to the very penny. Now, if you've never heard of this thing before, they're very easy to understand. The purpose of a trailing stop is really simple. If your trade comes out of the gate at 150 miles an hour, you're riding this momentum to the very top. Maybe you're up 10x, 20x on your money in the blink of an eye. But then, as so often happens, once that trade edge shows any signs of fatigue for whatever reason, a trailing stop is pre-programmed from the start to cash you out and deposit any and all the winnings in your account automatically. Then you just repeat this over and over again. Not bad, huh?
Not bad at all, and it seems as if we still have some more money to make, perhaps.
Oh, are you kidding me? Look at this chart of Alexion Pharmaceuticals from years back, right? It's now a $24.5 billion firm. This is my after chart, how it would have looked if my ADG system had been put to work.
Now, it's a relatively straight line, but it's not completely straight. There are small pullbacks along the way, yes?
No problem. Here's why. Because you could have pre-programmed that trade to exit, effectively to automatically cash you out when that pullback began. And here again, the money is automatically deposited in your account, Ed. Then the clock restarts, my ADG system continues to monitor Alexion, and we can repeat this trade over and over again. $6,505 here, $10,416 here, and another $14,166 here. A week later, $7,177, and if that weren't enough, $11,473. Payouts like these could have automatically deposited in your account without you having to lift a finger. And when it was all done, when it was all over, you could have collected $183,300. Now, again, there are opportunities all day long with this system. Look at Applied Optoelectronics.
More chaos in the chart, actually.
Clearly, back in January 2017, this stock was trading at just over 28 bucks a share. But my ADG system would have told you its true price was somewhere in the $80 range. Now, that projection would have, as a lot of these projections, been turned out to be conservative.
Which really, if you think about it, is always a good thing.
It is, because the stock actually landed at $84.20 a share. And look at the kind of money you could have been making. Your average monthly payout could have landed at $10,082. And your $2,500 stakes would have multiplied into a total windfall of $60,492. That is why I like the options side bets we're talking about. Again, sure, you're going to lose money from time to time. This isn't risk-free. But I look at options as one of the least risky investments in that they require less money up front, which means you have less at risk. But here's the thing, you can turn that into a boatload of money. Take Charter Communications, Ed. You could have been handed a grand total of $405,511 from one payout after another. And no doubt, Ed, I see from the smile on your face, you're getting the idea here.
Well, sure. Once your ADG system identifies an arbitrage opportunity, this is almost like being granted a license to print money. Keith, look, we know this. It can clearly spot stocks that are severely underpriced. But hang on a sec. What about the other side of the coin? Can it spot the companies that are ridiculously overpriced, and can you use that to make money as well?
That's a great question, and an answer, yes and yes. On that grid, my ADG system can hunt for stocks with the deepest valleys that are the darkest blue possible. In fact, Maxar Technologies comes to mind. It's a company that makes communications equipment. In August of 2018, this stock was trading for around $38 a share. But my ADG system would have determined that was way too expensive. It would have projected its true price at $12 at best. So, here we go. Time to start laying out those side bets. And sure enough, the stock fell off a cliff from $38 all the way down to $11.75. And the next month, you could have collected $6,025. The month after that, $8,175. Month after that, another $10,400. In 3 months, Ed, as this stock sunk like a cement block that's been thrown in a lake, you could have pocketed a cool $24,600. But let's take this one step further. Let's think even bigger. Understandably, Ed, nobody wants to relive the Great Recession, the global financial crisis. But recently, we ran some tests on my ADG system for the years 2007, 2008, and we discovered it would have predicted this economic catastrophe before it happened. What's more, Ed, it would have pinpointed over 100 stocks right before they fell 30% or more. I mean, how'd you like to have that kind of advantage? Yum Brands, Lockheed Martin, Delta, Halliburton, US Steel, they are all on your screen. Many of these companies, Ed, fell 50, 70, even 90% in a matter of months. Now, you could have either played this to your advantage or you could have played it safe. That's your business. You could have gotten your money out of the market before the crash. But you have to understand that my ADG system does not think in terms of bull markets or bear markets. The ADG system doesn't care if interest rates just went up or the jobs report came in lower than expected. My ADG system is all about arbitrage, that magical spread we discussed between what Wall Street tells you today a stock is worth and how it's priced versus what its true price should be. If that stock price, if the true price is higher, then we can make money. If the true price is lower, we can make money. That's what makes this system such a game changer.
Keith, I think the people you've shared your ADG system with would agree with you, and that is definitely a small circle.
Oh yeah, and that was very deliberate. I was not ready, Ed, to pull back the curtain all the way until I perfected it. I mean, this is not a basic program. My ADG system is a construct of numerous algorithms working in tandem, and finding the right mix took years. Plus, being able to hunt for these kind of arbitrage opportunities requires, frankly, a level of computing power that was not available until very, very recently.
Nevertheless, you've been beta testing version after version with some of our readers, and you've been getting their feedback. The results were everything we hoped for and a whole lot more. We started receiving emails from participants saying how they would wake up, check their accounts, and find they were $10,000 richer. Or maybe they collected $36,000 in 3 days, something they did not think was possible before this. Others were up $45,000 or $50,000 when they sent you their progress updates. Maybe they waited a bit before checking in. I remember reading a letter where a gentleman said your recommendations tripled his net worth in about a year. And when you hear you've made someone $1 million or $1.5 million, hey, come on. You know you're onto something here. We have compiled your accomplishments before this broadcast. And looking at some of your best trades, you delivered a major winner every 6 days on average. Now, when you add them all up, including the losers, you get total gains of 14,383%. If someone started with $10,000 and grew at 14,383%, they'd be sitting on $1.44 million. Okay, there's only one word. Put the 3 letters out there. Wow, it all fits, because that is life-changing money. All right, Keith, it now begs the question, do you believe that you have finally perfected your ADG system?
Honestly, Ed, yes and no. And here's why. Yes, let me explain. In that, I believe it is the perfect moment in time for this particular system. But no, because on Wall Street, if you rest on your past accomplishments, Ed, you get eaten alive. The markets are constantly changing, and that is why I'm constantly adapting my ADG system to take on and conquer those changes. Frankly, nobody has a crystal ball in the future, not even me, which is why you've got to look at what it's delivered in the past. And that's why I think the time is right to share my invention with a new group of people who are ready to make some serious money.
And that is exactly why we're here, Keith. You are launching a brand new venture. This is a bold research and investment recommendation service, and you're calling it
Straight Line Profits, because that's what my ADG system was designed to do, to transform all of the chaos in the markets into straight line profit opportunities.
All right, take us through what someone can expect when they join Straight Line Profits.
I'd be happy to. I run my ADG system each morning before the market opens. So each morning before the market opens, I will release my ADG report. It's a very concise summary of any arbitrage opportunities that may be brewing. Now, historically speaking, Twice a week, a stock will appear in the upper right-hand corner of that particular grid. You'll see that tall peak with its red-hot color. And when an opportunity lines up just right, I will immediately analyze the situation just to double-check everything. Then, I'll release an arbitrage windfall alert. It will contain my research and the intel that comes directly from my ADG system, plus straight to the point instructions for capitalizing on this opportunity. So, Ed, let's, for example, say it's Thursday morning. You've received an arbitrage windfall alert from me, and our target was Grupo Financiero Galicia. You might not be familiar with them, but they're a $4.6 billion financial firm out of Argentina that trades on the NASDAQ. You get this alert at the top, you'll see the name of the company. If you decide this opportunity is right for you and you just want to trade the stock, you know what? No problem. There's its ticker. But hopefully, though, you're going to choose to go my route and execute the options trade. You'll see easy to follow instructions for that too. And that includes instructions for pre-programming this trade so that it automatically pays you any and all winnings you've earned when the time is right. You can scan this alert in 30 seconds and you're off to the races. But here's the thing, if you're like me, you want a bit more than that. That's why I will also give you a brief overview of the company and the readings from my ADG system. You'll see right here that this stock, for example, is definitely trapped in a cycle of chaos. But notice, Ed, how its recent trajectory has placed it on a pretty exciting upward path. Look where it would have landed on that morning's grid, Ed.
Upper right-hand corner, and it is beaming bright red.
Bingo, Wall Street had priced the stock at $26.58 a share. The arbitrage windfall alert would tell you this. And it would tell you that its true price should be north of $70 a share. That's a 163% difference. The alert tells you that too. And what's more, it tells you that it's time to strike.
Your ADG system will uncover about 2 of these opportunities a week. That's not bad. That's 104 a year.
Yeah, that's not bad. That's what history tells us.
And you have 2 of them ready to send to those who join you right now. They're going to be your founding members. So 2 6-figure windfall opportunities just to kick things off, correct?
Yes, to use an old expression, they're locked and loaded. My ADG system just spotted both of them, and we're not going to waste a second on these, Ed. Founding members will receive 2 arbitrage windfall alerts right after they join, as in immediately. And for both opportunities, as well as everyone that follows, I'm also going to send out a live trade demonstration. These are video walkthroughs for each target. I'm going to run through my ADG system's findings. I will show you how to place each trade step by step.
Now, correct me if I'm wrong, but this will be like I'm looking right over your shoulder the whole time.
That's the goal. And whenever it's time to cash out of a trade, I'll release a payday deposit reminder. I call them these because they're reminders that if you have pre-programmed the trade like I'm suggesting, any money you should have made, any money you could have made, should have already been deposited in your account. So I'm reminding you to go check that you've collected the cash. However, I also have instructions for closing out the trade if you prefer to do this manually, and some investors do. And since our goal is to collect windfall after windfall from a single stock, you could see a lot of payday deposit reminders. With Grupo Financiero Galicia, you would have received 27 of these things. That's because the company landed at $72.06 a share, a little higher, once again, than our projections. And while it shot up, there were lucrative little pockets along the way to potentially collect some cash. $7,000.